Hello and welcome back to Bitcoin Dorks, your daily source of news and updates on the cryptocurrency market. In today's video, we will be discussing the recent decision made by the Ontario Teachers' Pension Plan to stay away from crypto investments after a $95 million write-off. The Ontario Teachers' Pension Plan is widely recognized as a leader in the pension industry, renowned for its strategic investments and commitment to providing secure and sustainable retirement benefits to its members. With over 329,000 active and retired members, the plan has a fiduciary duty to manage its assets prudently and maximize returns on behalf of its beneficiaries. To achieve this objective, the plan has adopted a diversified investment strategy that encompasses a broad range of asset classes, including public equities, fixed income, real assets, and alternative investments. However, in a recent statement, the plan announced that it would not be investing in cryptocurrencies or crypto-related assets, citing concerns over the volatile nature of the market and the lack of regulation in the industry. This decision comes after the plan wrote off a $95 million investment in FTX, a cryptocurrency exchange, in March of this year. The write-off was due to a sharp drop in the value of the investment, which was made in 2021 when the cryptocurrency market was experiencing a bull run. The Ontario Teachers' Pension Plan is not the first institutional investor to shy away from the cryptocurrency market. Many traditional investors have been hesitant to invest in cryptocurrencies due to their reputation for being highly volatile and speculative. Moreover, there are concerns over the lack of regulation in the cryptocurrency market, which has led to several instances of fraud and scams in the past. This has made it difficult for institutional investors to enter the market, as they require a certain level of regulatory certainty before they can make large investments. However, despite these concerns, there has been a growing interest in cryptocurrencies and blockchain technology in recent years. Many experts believe that cryptocurrencies have the potential to revolutionize the financial industry by providing faster, cheaper, and more secure payment systems. Additionally, there are signs that the regulatory environment for cryptocurrencies is beginning to improve, with many countries and jurisdictions implementing new rules and regulations to govern the industry. For example, in Canada, the federal government recently introduced new regulations that require the Financial Transactions all cryptocurrency exchanges to register with the Financial Transactions and Reports Analysis Centre of Canada, FINTRAC. This move is expected to bring more regulatory oversight to the industry and provide greater protection for investors. While the Ontario Teachers' Pension Plan may have decided to stay away from cryptocurrencies for now, there is no denying that the cryptocurrency market is here to stay. As the industry continues to mature and become more regulated, we can expect to see more institutional investors entering the market and making significant investments. As we mentioned earlier, many institutional investors have been hesitant to invest in cryptocurrencies due to their reputation for being highly volatile and speculative. This is especially true for pension funds, which are responsible for managing the retirement savings of millions of people and therefore have to take a cautious approach when it comes to investments. However, there are signs that this attitude is beginning to change. In recent years, we've seen several high-profile institutional investors make significant investments in the cryptocurrency market. For example, in 2020, MicroStrategy, a business intelligence company, made headlines when it announced that it had invested $425 million in Bitcoin as part of its capital allocation strategy. The company later increased its investment to over $1 billion, making it one of the largest institutional investors in the cryptocurrency market. Similarly, Tesla, the electric car company, made headlines in early 2021 when it announced that it had invested $1.5 billion in Bitcoin. The move was seen as a sign of growing acceptance of cryptocurrencies among mainstream companies and investors. More recently, we've seen several large banks and financial institutions announce plans to offer cryptocurrency services to their clients. For example, Morgan Stanley, one of the largest investment banks in the world, announced in March of this year that it would be launching a Bitcoin fund for its wealthy clients. Goldman Sachs, another major investment bank, also announced plans to offer Bitcoin and other cryptocurrencies to its clients in the near future. These moves suggest that institutional investors are beginning to see cryptocurrencies as a legitimate asset class and are willing to take on some of the risks associated with investing in this market. However, it's worth noting that there are still many institutional investors that remain skeptical of cryptocurrencies. Many of these investors are waiting for greater regulatory clarity and more established infrastructure before they feel comfortable making large investments in the market. Moreover, there are concerns over the environmental impact of cryptocurrency mining, which has led some investors to avoid investing in cryptocurrencies altogether. Despite these challenges, the cryptocurrency market continues to grow and evolve. As more institutional investors enter the market and more regulations are put in place, we can expect to see continued growth and development in the years to come. So, that's a brief overview of institutional investors and their stance on cryptocurrency investments. As always, it's important to do your own research and make informed decisions when it comes to investing in any asset class, including cryptocurrencies. That's all for today's video. If you enjoyed this content, be sure to like and subscribe to our channel for more updates on the cryptocurrency market. Thank you for watching. I hope you learned something, and we will see you at the next one.